Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, August 22nd, 2022. And our top story today, overcoming inflation and market volatility to build savings and wealth. Today's show is powered by Funding Our Future. To learn more about Funding Our Future, its members, and its mission, visit fundingourfuture.us. And joining me now to discuss this and a lot more, Susie Orman is a best-selling author, personal finance expert, host of Women and Money podcast, and the co-founder of Secure Save. Susie, so great to see you. Great to meet you. Thanks so much for joining us on the program this morning.
I am happy to be here, Jeffrey.
This is very exciting for me. I've watched your program so many times, and I don't want to be a fanboy here, but I am a fanboy. All right, let's talk about some really important, these are challenging times for so many Americans. You've got inflation running rampant, high gas prices, high food prices. It's a difficult time getting products and services. How do you look at the world? How do you advise people, whether it's men, whether it's women, on what they should be doing now at this very difficult time?
Yeah. I think we're in very, as you just said, uncertain times, difficult times, but really they're more uncertain than anything right now. Because in my opinion, we have so many outside influences playing a big part in terms of what's happening here in the United States and things that we don't have control over. We don't have control over what's going on with Ukraine and Russia, truthfully. That can make a big difference as to what happens to us here in the States with our food and other things. We don't have control over China right now. And it doesn't take a rocket scientist to figure out what happens in China can really affect the economy here in the United States. And China isn't so happy with us right now. So you have these major entities like China, Russia, and the United States, two of them not liking the United States very much. And how does that affect us? Then you have a situation where you're right, inflation is running away and everybody says that inflation is coming down. All right, so it came down from 9.1 to 8.5, the last CPI reading, but give me a break. Really, everybody? You need inflation. They need, meaning the feds need inflation to come back to about 2% again. Now, how long do we think it's going to take to get back there? And even though I know gasoline has come down $1 a gallon, the price of food has gone up, your rent has gone up, and everything is in flux. Now, I don't know if we're going to end up in a recession or not. I would say I think we have a good probability at the beginning of 2023, maybe the middle part, that it may show up that we're in recession. So what I'm telling people is this. Listen, it does not matter if you get into a recession, we don't get into recession. You have to plan for the worst and hope for the best. So what do you need to be doing? You need to make sure that you have at least an 8 to 12 month emergency fund. You need to not be taking out loans from your 401k right now, because if you do, we go into recession, you work for somebody who lays you off because they have to now. That loan is due and payable usually within a month. And if you're not 55 years of age or older in the year that you left service, you're going to pay a 10% penalty on that. And no matter what age, it's going to be taxable to you as ordinary income. So you don't want to be doing that. You don't want to be taking out a home equity line of credit, because as the feds continue to raise interest rates, your interest is going to go up. Don't do that. You want to get yourself out of credit card debt, because interest rates on credit cards are going to go up. You do not want to sell out of this stock market. If you are invested in good quality stocks, mutual funds, exchange traded funds, if you have 5, 7, or 10 years longer till you need this money. And you know that you're in good quality investments. You want to continue to dollar cost average on a monthly basis to take advantage of the downs and the ups and average what you have, and you want to be very, very careful. So that's a very quick synopsis of what I've been telling everybody on my Women in Money podcast.
And Susie, one thing I want to follow up on, and I think we learned some lessons, and I'm curious to get your opinion on this. We learned some lessons during the pandemic. One is have an emergency savings fund, which you already articulated, but two, make sure you don't take on any more debt and pay down the debt you have. And Susie, I mean, you look at the debt that America has around its waist or around its neck. Each of us, it's tremendous.
Well, here's what's really happening, Jeffrey, that should really put everybody on notice, which is because of the pandemic and all the stimulus packages and enhanced unemployment benefits, and the fact that you very easily didn't have to go to work, you didn't have to pay for things. We're on, all kinds of deferment programs and more, really. So we were making more money, not working, spending less money because we didn't have to work, and our savings accounts all skyrocketed. And then the pandemic was over, and all of us were able to go out and do all of these things. And we all started to spend, not us maybe, Jeffrey, but the majority of people out there started to spend the money that were in their savings accounts. So as we're recording this right now, savings accounts are absolutely dwindling all the way down. Credit card debt is starting to go up and up and up and up. And even though you're not late yet on those payments, it's going to happen. Car repossessions are at their all-time high. And it's not just for subprime lenders, it's also for prime lenders, people who should have the money to pay it, and they don't. So what that is telling all of you is we are not heading down the right path. And I get that on television, they all say, oh, the consumer is still strong. Everything's good. You're still spending. With what? What money are you spending with, everybody? I don't think you have the money to be spending. And I can tell you one major warning sign is you spend money and you put it on a credit card. Okay. If you can't pay that credit balance in full at the end of the month, you are already in credit card trouble. So pay attention and do like Jeffrey just said. Every one of you needs to get yourself out of credit card debt now.
Susie, just one more question before we go to a commercial break. And this is about education. And I know you do your podcast. You have spent a lifetime educating people. We talk about behavioral finance. We talk about what Bill Sharp, a Nobel laureate, and others have articulated, that there's behavioral modifications. But do we need to do more as a country, as states, to educate people about financial literacy? And is it enough to just have one class as a requirement for you to graduate from high school? Or do we need to do a much more comprehensive curricula, if you will, from the time almost to the time you come out of the womb to the time as you age?
Yeah. As you get older, you're out of college already, you're whatever. I've written 10 New York Times bestselling books. I have over 30 million copies in print. The 9 Steps to Financial Freedom that came out in 1997 worked with why don't people do that which they know they should do with money? Okay. Millions of copies of that book were sold. And while it helped millions of people read it, Jeffrey, and it still kind of went in one ear, out the other, as well as whatever. So when you're already older, unless you're totally in debt, you want to get out, you don't have any money left, very seldom do you go to want to learn about money. It's just that simple. You need to do it in grammar school. It needs to start there. I have a book out called The Adventures of Billy and Penny that I very seldom talk about, but that's written for kids who are like 4, 5, and 6, and kids love that book. So you have to start teaching the values of money at 4, 5, 6, and up. So, of course, you should not be able to graduate high school without passing an exam on student loan debt and how it works.
Yeah, really, it's
Bare
really
minimum.
important. Yeah, you got to be you have to
yeah.
be a lifetime learner. I'm sorry, I didn't mean to interrupt you, Susie. I was going to say you really need to be a lifetime learner here. Susie, I need to take a very quick break. When we come back, we'll talk more with Ms. Susie Orman. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
And also welcome back to Susie Orman, personal finance expert, best-selling author, host of Women and Money podcast, and co-founder of Secure Save. Susie, thanks so much for sticking with us this morning.
Well, where else should I go, Jeffrey? Is there a better place to be than here? I don't think so.
There is no better place. I agree with you. There's no better place than to talk about money and talk about how you can save money. Susie, you just co-founded Secure Save. And I want to talk a little bit about that because this is, again, another part of your journey. You talked about your New York Times bestsellers. You've talked about the role that you've played educating men and women about saving. Let's talk about Secure Save. What's the genesis behind it? How do I access it if I want to put money away for emergency savings?
Yeah. It's interesting. Myself and Devin Miller and Bassam Saliba, the three of us, about 2 years ago, started a company called Secure Save. You can all look it up at securesave.com. And we all talked about, this was in the pandemic stage, what does the world need right now that they don't have? And the answer came up to that question as they need an emergency savings account. Because what is the goal of money? The goal of money is for you to be secure. What makes you secure is savings. Henceforth, the name Secure Save. And we talked about that. And the one question they kept asking me, if it's so simple and that's all people need, why don't they do it? And they don't do it because it's not automated for them. And so when you get a paycheck, what you bring home is what you spend. So we thought, why not create an employer matched emergency savings plan, an emergency savings account for employees, where the employer automatically helps the employees save money through payroll deductions that go right into an emergency savings account for the employee, and where the employer matches it. Now, many of our employees, maybe they only contribute $25 a paycheck. The employer sometimes matches $3 a paycheck. That's a 12% return on their money, Jeffrey. No cost to the employee whatsoever. The employee can get the money anytime they want. It's an out-of-plan benefit. It's not something like a 401k that you got to go to your human resource person. No, this is your money. We have an incredible app where if you want money, you just push a button on the app. You can follow how much you have in there. And we keep reminding you, if you want to take money out, is this for emergencies? Because this is really for an emergency savings account. You know, we have found that almost 60%, 55 to 60% of the companies that have signed up with us, when we send out the email to everybody, there's a 55 to 60% adoption rate. And hardly anybody over the past year or so has taken money out. People love it, and they're watching their money grow and grow and grow. That's what Secure Save is. So for all of you listening to this right now, if you have an employer or you are an employer, right, and you want to do this with your employee, all you have to do is go to securesave.com and sign up there.
Susie, more and more, I think one of the lessons that employers learned, and you talk about how easy it is to sign up, is financial wellness. The financial wellness of their employees is so important, because financial wellness, if you're well financially, your mental health, you're more productive, you're a better worker. So I don't see why it took all these steps in order to get to automating this. It just seems a no-brainer for employers to say, hey, we should be doing this for our employees.
So, you know, recently, Jeffrey, there has been bipartisan legislation introduced where they want to make it so that employers get to do this automatically for their employees. And it's called the Emergency Savings Account Act of 2022. And, you know, if you want to let your congressman know that this is something that you really want to do, go to supportemergencysavings.com. And there's a petition there. You should sign it. You know, just sign up for this, because all of you should want your employers to help you save money and match it for you in an emergency savings account. So that's what I really want to do. I want to change America so that nobody knows what it's like, you know, to have debt. We eradicate debt and we have money in savings, and therefore we all feel more secure.
Yeah, Susie, I mean, you're speaking our language. I think what people need to recognize is that if you have independence, you have financial security, it allows you to do so many things. And that's why, you know, starting to save early really sets you on that path as a long-term saver, a long-term investor. Man, it feels good, and it gives you choices, right? You have the choice to maybe retire early or transition to another career. You know, you can have 2, 3, 4 careers in your life. You don't have to just, you know, the days of working for 30 years for one company, those have come and gone. But now people can have multiple careers, because if they're saving, they're putting money away, they have independence, and they have choice.
Yeah. But, you know, besides just savings, it's really important that you know all the things that you need to know. You need to know why, in my opinion anyway, you should have a Roth retirement account, whether it's a Roth 401k, TSP, 403b, or a Roth IRA if you qualify, more than any traditional retirement account out there pre-tax. I would say forget about the tax write-offs now and go after tax. And there are so many podcasts on my Women in Money podcast that explain that, especially with the possible changes in inherited IRAs, where people have been already taking required minimum distributions and then they leave it to somebody. You better know all the rules. You better know that you need a will and a living revocable trust, an advance directive, and a durable power of attorney for healthcare. You better have those must-have documents in order. You better know about how to take title to your home. There's so many things that you need to know about besides just emergency savings, which is really, Jeffrey, why you and me, right, we're doing such an incredible job in trying to educate everybody on what they need to know, whether they want to know it or not.
Yeah. Well, I'll tell you what, Susie, we're following your lead. You're the trailblazer here. Really appreciate you coming on the program. Thank you so much for stopping by. And we look forward to having you back on the program again very soon.
Anytime, Jeffrey. Take care. Bye-bye.
Thanks, Susie. Great to see you. Thanks for sharing your perspective. And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website and, of course, our streaming partners like Amazon, Roku. There's over 300 streaming partners to choose from. We're back again tomorrow for another edition of BRN AM. Until then, I'm Joe Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.